Good morning and welcome to the Early Bird, and here we're looking at the Dow Jones on a 15-minute chart, and the only changes that have really taken place in in terms of our structures is that this original A, B and C here that we thought could have been the fourth wave here, and we thought we were into the fifth wave coming down through here. Obviously that's not the case, and the wave 4 has just expanded in terms of doubling in size. So the original A, B, C here becomes just the A wave, and then the B wave, and then the C wave in 5 waves. Now this could be finished at this point here, but we have to expect it to come up higher as well. So this line through here, this is we call the supply line, and that's the 11,500, which is the medium level. And normally with corrections, well, first of all, corrections in terms of Elliott wave are the weakest link in the theory, and this is why they can just expand on itself, and yeah. So but the C wave here normally has some sort of relationship to the A wave here. A little bit like this one actually, that little A wave up there and that little C wave there. So that's is something that we're sort of looking at through here, and we'll be looking at 5 waves moving up through this point here. Now it can fail at these supply levels here, but we need to give it some space to move up through here. And when we have a look at this on the daily chart here, you can see this is the 11,500 through here, and I've just drawn this little grey bar in here, which is last night. So last night's has moved up nearly 4%. So it sounds a lot, but in the scheme of things, it's not a lot. And we still consider this, what's happening here, a wave 4. And yeah, and we're pretty sort of confident about that, because this particular structure coming down here is an impulse structure. So it gives you the direction of the market. So that's quite clear, and it's quite clear that this is actually a rally here. What we don't know is how far it will actually come back. So this 11.5 here is what we're looking at, and the norm is a 38.2 retracement level coming back, which is the 11.4 here. So that previous time here it came sort of close enough to it, but let's just consider this a retest of 11.5 and rolling over from that point. I'm not going to consider it a bullish prospect until it has solid support on the 11.5 there. I know that that our markets, some of our stocks within our market have sort of rebounded sort of back sort of up into this sort of 61.8 retracement level sort of area, and the 50% up here. But the markets are volatile, and they are going to swing. It's a point not to overtrade at this point until we've got this figured out here. So yeah, but what has produced itself, as I mentioned on this occasion down here, that on local markets we could have gone long through here. I didn't put any long trades out because there wasn't a setup there, but there is a bit of a setup here now, and we're going to talk about that shortly. But let's just go through the market as such. So this particular pattern here that we're looking at here is what we're seeing in the Australian dollar. It's what we're seeing on the Australian XJO and SPY. It's what we're seeing in London, Europe. The S&P 500 is the same as well here with its pattern as well. So it's the same sort of thing here. We know that there's, this is the first level of supply here. Supply just means sellers. So that's going to, it's already hit sort of resistance here. But we'll see how far it can push up through here. We're counting 5 waves up. I did pull this apart this morning to have a quick look, and it is something like this here. So we should see something about the same length of this A wave into this area here. Once again, the 1,200 here, if that developed a strong sense of support on there, and it would take time to do that, then we could look at some longer, stronger long-term positions in there, but that's not the case at this stage. Otherwise, at this stage here, I know it's tempting to go in and trade, and our emotions tend to sort of carry us away on that sort of prospect as well. But these markets are facing resistance. They're not sitting on support yet, so you can get trapped in there quite easily. So just be aware of that. The UK is the same as well. The 38.2 retracement level from memory was at 5.4 here, but once again we'll see this push up from 5 waves in through here in terms of an A and a B and a C wave up through here. So just sort of follow that up. You'll need to trade the minor levels here as support, but also break that down into the sub levels, each 100 points into the sub levels, and trade those. So just depending on your time frame there. It's the same with the with the SPY as well. Slightly different pattern and slightly sort of more uppish as well in terms of making new highs here, but we're looking at the same thing as well. I strongly suggest that SPY traders use the sub levels, so that's between the 100 and the 200 there. You would have group 1, the midpoint, and then group 2 through here. On the open here, we'll probably see some support come in at the 41.50. If you can recognize that support at the 41.50, then that's fine. Then you can work off that to the long side. Just watch any squeeze on the opening. The squeeze normally takes about sort of 15 to 16 minutes to sort itself out in most markets. So after that, it will find its trend and follow that trend. That's why you can use a 20-minute bar or half an hour bar as a robo method to work into the market. But it is the 4172 that you want as support there. If the market is going to move up from here, then expect a corrective pattern across here, and that pattern across there would be the same as there. So you'd be expecting some push up, which would stay within group 1, so 10, 20 and 30 would stay within group 1 there, and then come back and work into this area here. But after a small correction through here, an ABC correction, because there does appear to be 5 waves into here actually. If you pull this apart here, there would be the 1, the 2, the 3, the 4 and the 5 up to here. So this would be an A and a B and a C, and then if there's a push up through there, then you also need to expect some sort of corrective action across there. Once that's done and dusted, then you can scale in through this group here. Otherwise, you don't do it. The drivers are pretty much doing what they're meant to do. The copper market here that we use here. Now, it does appear that we've got 5 waves from the 450 down through here to the 380, and then we'll be looking for a 50-60% retracement level into here. So we can expect the market to come back up into here, and the 410 and the 420 are the likely areas here. That's where the supply is. So we'll be looking, if you wanted to break this down, this is a daily chart, so if you wanted to break this down, looking for an A and a B and a C wave into here. Once that's complete, then that should roll over there. But if it does sort of roll over here, then we really want the 400, the medium level here, to be the resistance. Shorting above it is not such a good idea, because as good as the Elliott wave and accurate as it can be, the concept of support and resistance is a safer way to trade. So money management, support and resistance is pretty much the simplicity of this game. And being on the right side of certain numbers, or the closest largest number in that case, is what it's really about. And your skill and understanding of support, what is support, how do I recognize it, and what is resistance, and how do I recognize that. And that's in the retesting and in the volume. The oil market as well should push up a bit higher. We've found support on the 83 here. That's a retest coming back into here. So the breakout's not is important. It's like here, the breakout's important, but the retest coming back is more important. And that's a small retest up there too. You see how it hits the 83, but it doesn't get up there on support. So that fails there as well. But here it's come up and it's come up and it's come back and it's sat on there and it's got support there. So the support on the retest is more important than the breakout going through there, and that's what we're talking about. Now this move up here, we've on the 4-hour chart, you'd see that coming in at sort of 86.50 to 87 there, but I think this can go higher, and the reason for that there is the basing factor through here, and it will follow stock, so I think we can look at the 88 there. So that will give, we'll be looking at some switch setups on our local market, and seeing these sorts of markets here, the copper and the crude here following stock, the S&P 500 and the Dow, it does give us a little bit of space to trade up and know that those drivers are behind us there. So while we've got a bit of confidence in the market, in those drivers there, we're also seeing the top at in gold here. So we're looking at this as a third wave there and a fourth wave pulling back. Now the fourth wave pulls back 38.2%, so that would be at around the 1680 there. But I think it's important to consider two things here. One is the 1700, of course, but also bigger than that, unusual but true, the 1650 here. The medium level 1650 here needs to come into play here, and also that's really where the volume is here. So what markets do is they'll drop to where the volume support is, and then they'll bounce off that. If this fails here, yeah, and that moves down, well, they simply drop down to the next level of demand where the volume's sitting. It's just a game of support and resistance. There's a bit of depth and understanding with that in terms of volume, and also the psychology of numbers. And speaking of that, the 18 here, as I mentioned, the 8 is a profit-taking number. We talked about that at the 1780 here, the 1772, you know about that. So anyway, the 18 profit-taking number, and that's coming into play there. We expected that to happen, so now we're looking at the wave 4 here. So it can come back into the 38.2 retracement level here. So we need to bring in the 1650, but also not to be blinded about the 17 here. There'll be some small bump there, as there will be at the 1772. So what we'll look for here is we'll look for an A and a B and a C wave to come down through here. I need a closer look at this, to have a look at this structure here. If this structure is in 5 waves, which it appears to be, then we'll have 3 up and 5 down through here. Normally we just watch and observe the first leg down to find out what it is. There's 12 different types of corrections, and by observing this and understanding what this is, we can halve the amount of corrections that are left. But wave 4s are complicated, and that's what we're dealing with in the rally in the indices at the moment, and the Australian dollar. Now, the currencies, there's 2 basic counts really for the currencies. This is the euro here on a daily chart, and we've got this triangle pattern that we're looking at through here, and it could certainly break to the downside. Yep. But the other pattern we've got with the triangle pattern is certainly a break to the upside. So we're in no better position here, but we've known this for quite some time, and we just need to allow this to play out. So we understand that that with the US dollar index here, we understand that 75 is a bit of a line in the sand. And if that developed a really strong support, which it could do, then, and not just to break up through there, we want to see it come back and develop on there. So if we get a nice support on there, then we can look to the long side on the dollar and the short side on the euro. And that's a real possibility. But we also need to consider a move under here would see us to the downside here. And on the euro, that would be the 144 and the 140 on there. So but at the moment, this is the euro here on a 2-minute chart, and at the moment here it's moved off a little bit here, but the 142 is support. We've had that sort of nice retest back, and you can see it developing through subgroup 1 here, the 10, the 20 and the 30 here. Sure, this may come back and test into here. It hasn't really sort of checked it properly yet, but it's just, and this obviously this is the 72 and the group 2 up at this stage here, so there's a fair bit fair bit to go within there, but you can see that they're testing here. So just looking at this small, this is like a little 1 and 2, this is like a third wave going up and a fourth, and there will be a fifth there. So this is the midpoint here, the 50. So there's not much you can do here. What you'll need to do is just allow this to unfold here. This is the what we call the arrival, the reaction, the support, which is still planning out now, still going in there. So then we'll see the first high above the level. Once we get that first high above the level, then we'll see an A and a B and a C wave across there. After that, if it finds support back on the midpoint, then you can go up from that point. But you need a base to work off, and this is in the very early stages of this, so moving in there too early will only get your fingers burnt. So you'll need to give that plenty of time to unfold across here. So this is the normal trading levels classic pattern, where you have the arrival, the reaction, looking for support. Once it's found support, and that may not be it, but it looks like it, then we'll have the first high above the level. And the first high above the level is normally the fifth wave, which is the 1, 2, 3, 4, 5, and the fifth wave will have 5 little waves in it, and then we'll see an A and a B and a C wave, the 3 waves swing across this, and then we'll see it push to the upside there. Okay, so the Australian dollar is very much like the indices here, and what we were looking at, this is a 4-hour chart. What we were looking at the other day was an A and a B and a C here for that there, but this is just getting larger now. So this wave 4 here is just the A wave, the B wave, and the C wave pushing up. Now this will run up a bit higher here, so this will push up in, this looks like a wave 1 and a wave 2, so we're pushing up through wave 3 here. However, we've got the 104 here, which will be the resistance there, so you'll need to navigate that. And in terms of navigating that, we can see here, excuse me a bit, we've got sort of close of market there. This is a 2-minute chart, and we've got, looks like the wave 1, wave 2, wave 3, wave 4, and the wave 4 is still going out through here, and it's into the closing time or low volume time. So there will be the wave 4 here and the wave 5 up. You can see this is the 104 here, the 103 here. So we've got important aspects here. We've got the group 1, which is 10, 20, and 30. If support is found on this group 1 here, then we can naturally look higher, and of course the first place to look is the midpoint, which is the 50. 5 is the second strongest number. Once this has developed support here, then you can look to move up through there. Depending on how you trade, if you're scalping, you would trade from 3 here, get out at the 50, wait for the 50 to become support, then move up through here. You'll take profit at the 65, take it at 72, maybe leave a little bit in there, maybe not, wait for 72 to become support, then move back in, then build on the 80, and then move out just before the 104 there, allow this to do its correction up there, and then move back in sort of much later from that point there. So it's, yeah, just a game of snakes and ladders, support and resistance, and money management in holding position. So it's always good to have at least 3 contracts when you're playing markets, because it gives you much more versatile in managing the money, so to speak, so you can scale in and out. Okay, that's that in a nutshell. What I want to talk about now quickly is I want to talk about the switch setup, and there is a video on the switch setup in the ASX day trading section. But if I just have a look at some stocks here, just to I just need to bring the volume into this as well. The volume is a real strong part of this. So just bear with me a second. Squash all this up here. It's a nice little setup, this, and it is based on the volume. And okay, we can use this one here. But I'll just flick through the charts quickly and whatnot. The switch setup is, once you've made a new low here, such, yeah, this is why we didn't go sort of long the other day. But once you've got the new low here, then you wait for the market to come to move up, but then you wait for the market to come down. And what I mean by coming down is you see how this low's here, then this low is higher here, then this low gets taken out through here. So that low through there, that high there, that coming down through here is actually checking the market depth to see if there's any buyers in there. It's checking the demand. It's the retest. And you could see this as wave 1 and wave 2 here, and then going up for wave 3. So this retest coming back deep into here is what you're looking for. And then we just put the long order 1 point above there, and then we put the stop there. I think today, Friday, that we could take at least 75% of the position out before the close, because we just don't know what's going to happen over the weekend. Yeah, so this is the pattern, and across all the markets at the moment, it's in 3 bars. It can be in 3 bars going up and 2 bars coming back and so forth, but in this case, it's just 3 bars across most of our market. And the strong points and the weak points these are the pros and the cons that I want to point out here. First of all, I wouldn't take this trade here as a switch trade, and the simple reason for that is because the large number here. This is 4 here, and 4 is a medium level. So I don't like buying before the levels here. If I was going to do that, then I'd only buy a very small position, and I'd be more inclined to put the buying price at 401, because all the selling orders will be sitting at $4, because that's where everybody will be thinking. So if you put it at 401, then all those orders will be taken out at 4 before your one at 401 gets filled. So you're clearing the decks, and that's a sign of strength. Now, but it's not a good idea to go before a strong number. That if you're above that number, or this bar here was sitting above the 4 there or across the 4 there, that would be better. Now the other thing is the volume here. Understanding the price relationship between the volume bar, the price bar, and the volume bar. So this is really good here, because we can see that in these 3 bars that we're talking about, this bar here has got more volume and it closes up. This is a sign of strength. This one here closes down, but it closes on less volume than that bar. So that means that's actually a strong point. If this one here had closed down here, it's closed lower than the opening, and it's on low volume. If it had closed this with higher volume here, higher than this bar here, then there would be sellers in the market. But it's closed lower, and we can also see the trading range here is very small as well. So there's not a lot of sellers there. Nobody wants to sell, so to speak. Then we see this bar come in, and we can see that it's taken the low out here. It's gone down into the market depth. It's checked, and there's support there, and it's closed higher on higher volume, higher than this one. So that's a really good setup there. It's just the fact that we're facing the $4 there. So that's the negative aspect of that. If we go to the next stock, which I don't know which stocks these are, there's just in my watch list, we can see here in this case here that this is this stock here. It doesn't really matter what these stocks are at the moment. I've put out about 20 trades, and we'll you can look at those and find your own as well. Now this one here, its problem here is it's got the medium level there, hasn't it? So it's got once again, like that 4 there before, the $4. This is the medium level here. Now the volume here on this bar here would have been nice if it was higher than this one here, but this one's okay because it closed higher than it opened. Do you know what I mean? So if it closed lower, then we would have had a problem, but it's closed higher than it opened on higher volume, so that's okay. So if we had to put a position in here, I would certainly put it at 251, not 250. Okay, so that's where that order would go. And once again, it's taken the low out here and check the market depth, so that's good. I want to find some not so good ones. This one here is quite good as well, and here again, that high there is as high as 120.5. So you put the order at 121 on that one, and we've got more volume increasing there. So that's good as well. I am considering these situation here still a wave 4 in terms of what we've been looking at with the indices as well. So we'd see down for 1, back for 2, down for 3, and back for 4. So these may not go very far. So that's why we want to exit them today. This is a nice one. This is a bit of a penny stock. I think I may have put this one in actually. This has got nice volume here. Yeah, big volume there. On the down bar here, we've got closing lower but on lower volume, and then we've got this one here, this higher volume here, and closing higher here. The problem here, also once again, is a medium level, even though it's 40 cents. This is AFR, so we'd have to put that at 41 there to make sure that we've cleared the sellers out. Okay, and the stop would go under there and take some profit before the end of the day. Now, yeah, you'll see in the market depth anyway that just naturally at 41, 42, and 43. If you get past 43, then you'll get to 45. But definitely bank most of it. Yeah. So this one here is interesting a bit further because this one's got increasing volume on the down bar here. Yeah, and it's got lower volume on the up bar here. And it hasn't taken out the high. If it had taken out the high here, then we could have cancelled out that volume there. We know we've got more strength, but it's still under there. So if you're going to go on this one, you want this to be taken out. So the 1380 there. So the 1380 is really, it's a little subgroup 2 there. So it would be 1372, 1380. So you want to be 1383 to get above there. So just looking at the volume there, this is all pretty low volume here, even though the setup's okay. But once again, you're facing that $2 there, which is a major trading level in this case. So you don't want to go for that. That's a no-goer. And sure, look, sometimes you just don't know which way these are going to pop, and which one's going to be the better one and all that kind of stuff. So, but you just need to go with probability, and buying under a level like this is not good. And all this correction stuff up here, that's where all the people bought there, right? So they see the price come up here like they did here, and they'll take it, it's their chance to get out. End the grief. Okay, this one here's in a bit better position. It would have been nicer because it's sitting on top of the medium level here, yeah, the 150. But the problem is this move up through here has got less volume than this move here. If this one had more volume there, then we know that people are eager to get into that, and that's the evidence. The volume is the evidence. The price is just the shadow of the volume. So it's a game of psychology, understanding the numbers, how people think, and then the reality is the volume of how many people are going in there. So it's just having a deeper understanding of the pretty picture that we're looking at. But as far as the switch goes, it's moved up, come back, check the depth, and it's off there. The stop would have to be here. Don't put the stop at 150. Put the stop at odd numbers. We use $47 rather than 49 in case there's a spike in price. And also we understand 48 as well. So the buying orders will be at 50 and 48. So having it 47 is logical, 3 and 7s to the upside. This is quite good, bit bumping around here a little bit, but the bars are correct, the volume is in the right place. We're just facing the $2 once again, so that's not so good. This one here is quite good, but once again we're at a medium level here again. Medium level 650. You probably think 650 doesn't mean very much, but you start looking at stocks at $6.50 or any stock that's traveled through $6.50, and you'll start to get the idea of that. So nice setup, good volumes here, everything's perfect here, but we know that the sellers are sitting there. But, if you're going to go into this, you could just put a little tiny bit in and keep it very tight and try and get on there and look for support there. So you can work it, but, we're considering the Dow Jones and so forth as as wave fours that are going to end. So we don't have those driving factors behind us. Sure, we have some driving factors in the copper market and crude, but crude's just going to follow stock anyway. So there's not a lot there. But these are good little setups, and just need to find the right ones. And I did go through and find some there. This one here is at $4. So if we can get above, that's fine. The volume's okay. It would have been nice to see a bit more volume in this bar here to get above there, but that setup is good. It's on there. Yeah, trade to the gap. But understand the levels between here, because the orders will be at 10, 20, and 30, and then you can also break that down. So anything between in 10, so 5 would be the strongest. So you got 1, 2, 3, 5, and 8, the Fibbo numbers there, and the orders will be sitting there. That one's sort of bolted, but they never had the retest there. And you can see how that bar moved up there, yep, but on lower volume. So basically it's moving up on hot air there. Volume's not good on that one. It's at $4, so above that, not so good. On $20, yeah, that's okay. That's all right. This is ANZ, but we've got that one. It's checked back in here. It's done that. It's above the level there. So taking that above there and keeping the stop under the level here, and the volume's good. So that's a goer. Not really, but it's possible. Would have been nice to see more volume in this one here. Just trying to find some that are there, that are okay. This one's not okay. It's come down too far. I'll just get rid of the levels here because it makes it a bit difficult to go through. Just want to go through quickly. Bit of a low volume situation there. Lower volume there. Nice setup, low volume, but also on the 28 here, so you're above the 28. That's good because 28 is a minor trading level, and you've got some space to get to 30 there. Low volume here, so you want that high volume there, you know. That's what you're looking for. It's got low volume there, but still it's okay. But you've got the dollar sitting in front of you there, so there's definitely going to be sellers sitting at the dollar, so that's a problem. Anyway, you get the general sort of idea. Just trying to find ones that, this is a nice one here. You've got that strong volume there. You've got that little short move there on lower volume. Then you've got this increased volume there. This is AWE, just in case you're wondering. I think I've got that in the list anyway. So I've been through here a bit. Yeah, it's got it facing the dollar once again. I know I'm going through quick. I'm just trying to find some that have got a little bit of a different story that we could use in explaining. But anyway, you get the general idea, and I'll put a list of 20 of those out there. This one's quite nice, really, because everything sort of there is really volatile and everything. But we're above the $8 there, which is the major trading level. So we're above that, which is nice. So it clears the way for us. We've got volume here. So yeah, that's okay. Another bank, that's Ben. Okay, I'll leave it at that, and I'll put the list in there. Alrighty, well, good morning and good luck.